What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So a lot of you guys wanted me to do a review on Owl Rock Capital Group. That's ORCC stock. This is a business development company. This is a high yield business development company. We're going to check these guys out, and happy Sunday fun day to you guys. So I wanted to post a video. I'll be at work right now, but I wanted you guys to check this one out. This is a very interesting business development company, and I'm going to show you its dividend history compared to a few other business development companies, and it looks pretty good. So I'm going to go over these guys and compare them with their dividend trends with some other popular business development companies. So if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button, and let's check these BDCs out right now. So Owl Rock Capital Group, ORCC with a symbol, has a dividend yield of 9.76%. So we need to look into it a little bit more. A PE ratio of 9.76. Average volume 2.51 million US dollars. The market cap is 5.01 billion US dollars. G range is 1209 to 1533, and its day range is 1256 to 1273, and its previous close is 1266. Excuse me, 1266. So let's check these guys out. So ORCC is a specialty finance company and business development company focused on providing direct lending solutions to U.S. middle market companies. They seek to generate income and, to a lesser extent, capital appreciation by targeting investment opportunities with favorable risk-adjusted returns, including senior secured, subordinated, or mezzanine loans, and equity-related instruments. Our investment strategy is intended to generate favorable returns across credit cycles with an emphasis on preserving capital. We intend to pay a quarterly dividend, and shareholders can learn more about our dividend history here. So they're externally managed by Owl Rock Capital Advisors, an affiliate of Blue Owl Capital, and part of Owl Rock, a division of Blue Owl. Owl Rock, together with its subsidiaries, is a New York-based direct lending platform with approximately 44 billion of assets under management as of March 31st, 2022. So let's look into these guys a little bit. So Owl Rock's relationship-oriented approach to investing provides companies with sizable commitments to facilitate transactions and support their growth needs with certainty, speed, and transparency throughout the entire investment process. So let's check out their portfolio. They have common equity. The big thing is first senior secured, second senior secured, unsecured debt. This is their capital structure. Preferred equity is 2%. So the secured, the senior secured is way up there, 74% and 15%. So the investment funds and vehicles is 2%. So right here, their debt investments are at a floating rate. Floating rate debt investments 99% to 1% fixed. So their portfolio is well diversified across industry and geography. So internet, software and services, financial services are 11%, 9%, insurance is 9%, food and beverage 7%, healthcare providers and services 6%, manufacturing 6%, health and technology 5%, distribution 4%, consumer goods 3%. So they're well diversified. They're mostly in the South, a little bit in the Northeast. So the South and the Northeast are the most dominant, followed by the West and the Midwest, and international at 7%. So let's look a little bit more into these guys. They're very transparent about their types of groups. So they have a lot of insurance, chemicals, consumer products, aerospace and defense, food and beverage, Balrog acquisition. That's very interesting. They have a lot of internet software and services, like I said, oil and gas, financial services, insurance. They got a lot of stuff that's very diversified, which I like about them. Business services, there's holding companies, EET buyer. This is like some companies I've never even heard of. But the thing that's very interesting with these guys is their revenue and their dividend history. We're going to go over that. Revenue-wise, they're looking pretty strong. 2016, 28.8, 2017, 159.87. This is in millions US dollars. 2018, 388.858. 2019, 718.019. 2020, 803.287. And then 2021, 1021.403. So now we're going to check their dividend history. So these are kind of a new kid on the block. So 2019, they're 31 cents. 2020, they're 39 cents. Then 2021 hit, they were 39 cents, and then they hit 31 cents. They took a little bit of a dip. So the dividend growth in the past 5 years is 4.51%. Payout ratio is 96%. Number of dividend increases in the last 5 years is 3. So the 9.76% dividend yield is a little high. So if you bought one share, you made $1.24. So this one's definitely on my radar. I'm going to compare it to a few other business development companies real quick. And I'm going to start with ARC. Okay, ARC is a little bit, when they hit the market, they're a little bit older. But the 37 cents and 38 cents, and they were stagnant for a while. 39 cents, and then 40 cents. And then you got this special dividend. They're slowly increasing. 41 cents, and then you see 45. So then you see these dividend trends. Now this is, again, plus 3 cents. So you're getting, the rate plus 3 cents. So this is a little misleading. I apologize in the one video, and I probably didn't explain it very well. Payout ratio is 87%. Number of dividend increases in the last 5 years is 4. Dividend growth in 5 years is 1.89%. That's kind of a given looking at a business development company, especially during a pandemic and a potential recession that's going to happen. So if you bought one share, you made 168 with an 8.83% dividend yield. I'm going to go over 2 more business development companies. And now we're going to go to Hercules Capital. I've done videos on these guys. 27 cents, 28 cents, 31 cents. So that was a while. It took a while for a lot of these companies, and then they hit 33 cents, and then they were 34 cents, and then 40 cents, and slowly creeping back up in 2020, 21, 37 cents, and now they cracked 48 cents. So the dividend growth with these guys is 1.35% in the past 5 years. Number of dividend increases in the last 5 years is 10. Payout ratio is a little high. I'm not too worried. Again, the revenue is pretty solid. You bought one share, you made 132 with a 9.24% dividend. And we're going to go over one last one. Let's start with CSWC. 2016 was 4 cents, then 6 cents, then 11 cents, and 17 cents, and 19 cents, then 21 cents, then 24 cents, and 26 cents, and 28 cents, then 29 cents, and then 34 cents, then 36 cents. You get that little 48 cents, and then 39. They're slowly creeping up to 51 cents, but we still need to be careful with this yield trap. 52 cents, 53 cents, and they cracked 63. There is a high payout ratio, so we need to be aware of that. Number of dividend increases in the last 5 years is 14. Dividend growth in 5 years is 13.34%. Dividend yield, if you bought one share, you made 192 with a 10.14% dividend yield. So let me know what you think of this video. If you are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. One more thing. So I have to give kudos to my apprentice, Raylan Records. She is my female apprentice. My male apprentice is Frank. And you guys know who Frank is, but I had to give a shout out to her to have me check out this dividend stock. And this is one I may buy in the future because I like the revenue. Hopefully the dividend trends go up, and this is a pretty hot, high-yield dividend stock. So I wanted to give you a shout-out on this one because I think this one's very strong. So I promised you I'd do a video on that one and reveal you that that dividend stock. High yield, remember we have to always be careful with high-yield dividend stocks. And again, business development companies, 90% of what they make go back to investors. But we have to be aware of yield traps because Prospect Capital, those guys are yield traps, and we have to keep an eye on the revenue. We need to make sure that the dividend's safe, and always be careful. And again, this is not financial advice for entertainment purposes, only disclaimer in the description. But be careful with those high-yield business development companies. You guys take care and have a good one.